Everyone always says your first home is the biggest financial move of your life. And to be fair, I think that's pretty close to the truth. But what people don't talk about enough is the psychology behind it, because buying your first home isn't just about the numbers. It's about one word and one word only: home. And that word carries a lot of emotion, identity, and meaning to a lot of different people. It's tied to who you are, what you value, and how ready you are to make a long-term commitment. So in this video, I'm not going to talk about saving a 20% deposit like everybody else does or comparing interest rates, because who really cares? Instead, I want to talk about 5 considerations that are way more personal, questions to ask yourself and help you understand before you make that decision for yourself. Buying your first home isn't just about what you can afford, it's about whether it fits the life that you're wanting to build. So number 1 is emotional readiness versus financial readiness. When I bought my first home, I did it with a partner. And at the time, it felt like the adult thing to do. Everyone around me was buying, and I thought, well, it's probably time for me as well. The truth is, I didn't really know what I was doing. It was exciting, but it was also terrifying. That fear actually pushed me to learn a lot, but I learned most of it in hindsight. We had built during the home builder grant in COVID and got $25,000 from the government, which was amazing. But when that relationship ended, we had to sell. Thankfully, we made a profit, but that entire experience taught me more about myself than it did about property. And that's what emotional readiness is all about. You can have the money, you can have the pre-approval, the good income, and you can still not be ready. Being financially able isn't the same as being financially or emotionally prepared. One of my favorite sayings is, there's a massive difference between being able to pay for something than being able to afford it. If I wanted to, I could go buy a new car in cash tomorrow, but I can't afford to because that money is meant for something else. And that's the same trap a lot of people fall into when buying their first homes. Just because you can, it does not mean that you should. So I want you to ask yourself, are you buying because you want to, or because you feel like you should? Is it for security, because your friends are doing it, or because it aligns with your long-term vision? When you buy it too early, it can trap you. Financially, because you're tied to a mortgage and a location, and emotionally, because you might feel stuck in a chapter you weren't really ready to start. You can also be stuck geographically because moving suddenly becomes incredibly expensive. Sometimes the smartest move you can make is actually to wait. Not forever, but just until you're entering from a place of strength. If you save an extra $10,000 to your deposit as a first home buyer, that could unlock another $50,000 to $100,000 worth of purchasing power. You might buy something you actually want to live in rather than something that just gets you in the door. Don't aim to enter the market fast. Aim to enter it wisely. Number 2 is control versus flexibility. Buying your first home is an eternal tug of war between wanting control and keeping freedom. Everyone romanticizes the idea of having your own place, the control of painting the walls whatever color you want, building equity, and feeling settled in. But control isn't always the same as freedom. Sometimes it can be the complete opposite. So the question becomes, what does control actually mean to you? Is it owning the property? Is it being financially independent? Or is it simply knowing that you have options? Because how you define control will shape the kind of home or even the type of purchase that's going to be right for you. If your focus is on wealth building and flexibility, maybe rent vesting makes more sense for you. It keeps you mobile, especially if your career might take you interstate or overseas. You still get to build equity and take advantage of property growth without being locked into one single location. However, if your focus is on security, buying your own home to live in might just feel right, but you'll need to see it through a longer lens, 5 to 7 years at the absolute minimum. That's how long it usually takes to build some meaningful equity as a first home buyer. Now, the biggest mistake I see, it's rushing that decision. When you rush, you don't think strategically about your loan structure either. And that's what kills your flexibility a lot later on in life should you decide to change your approach. If you save your money inside of your loan account rather than an offset account, that money becomes trapped. When you want to upgrade or move, you have to sell or refinance that property, and even then, it might not fix the issues. By keeping your savings in an offset account, your money still works for you, but it's not tied into the property. That's how you keep your options open to turn your first home into an investment later if you have the capability. And I've seen the opposite happen. People buy for security and then they feel trapped. Off-the-plan apartments are a classic example, especially here in Melbourne. They seem easy and affordable, but they rarely grow in value. So you end up stuck with a property that has gone absolutely nowhere, you're emotionally checked out, and you're financially frustrated. So before you buy, ask yourself, am I ready for this commitment? Do I know why I'm buying? Am I chasing ownership or opportunity? Because it's actually possible to be able to have both if you structure your decisions right from the start. Number 3 is going to be the 5 to 10 year vision test. This is one of the most important questions I ask all of my clients that I work with. Where do you see yourself in 5 to 10 years? And does this property fit that vision? Because your first home doesn't have to be your forever home. In fact, I don't think it should be your forever home. It should just be a strategic step in your journey. So for me and my wife now, that meant pivoting completely. After selling my first property, I used that profit to start my business. But as a business owner, I couldn't borrow again straight away. So we decided to rent-vest, to invest in property rather than buy a home to live in. The goal is to build a portfolio over the next 5 to 10 years that gives us flexibility to buy a family home a little bit later on from a stronger position. If I had my time again, I would have entered the market a lot earlier, around 2019, 2020, and leveraged the first home buyer benefits. But hindsight's a luxury. The point is, your property plan should evolve with your life. So when you're looking for your first home, I want you to ask yourself, does the suburb you're looking in fit the next chapter of your life? Does the property type give you flexibility, or does it purely box you in? If you buy smart, your first home will be the stepping stone, not your endpoint. From a growth point of view, I often recommend choosing scarcity over convenience. For example, an older, larger 2-bedroom unit in a family-friendly suburb will often outperform a brand new apartment in a really fancy postcode. Because with those smaller units, there's demand and very limited supply. It's real estate 101, but a lot of people just ignore that fact. And one of the biggest regrets I see from a lot of buyers who didn't plan ahead is they tried to do it all by themselves. They didn't talk to enough professionals early on. Brokers, accountants, property strategists, they learned after making the mistakes instead of before. Your 5 to 10 year vision isn't about locking yourself in, it's about making sure every move you make opens up more doors than it closes. Just like subscribing to my YouTube channel or booking in a meeting with me to be able to purchase your first home. That's going to open a lot more doors than you might think. Number 4 is partnership and financial compatibility. Buying a home with someone that is serious. In some ways, it's binding more than marriage, because to end a marriage, you can just simply walk away. To end a mortgage, you have to sell, and that can cost you tens of thousands of dollars. So before you buy together, ask, are you financially compatible? It's not the romantic stuff that matters, it's the real stuff. How do you both budget? Are you going to combine your finances or keep them separate? How do you make big money decisions both individually and together? I've seen couples buy before they've even lived together, and I just view that as a little bit risky. You don't really know someone's financial habits until you start sharing a little bit of your life with them. How they spend, how they save, how they handle stress. If you're not on the same page, the pressure is going to multiply once the mortgage starts. So just some personal rules of thumb that I like to use. If you can buy a home on your own, definitely do it. If you're in a long-term committed relationship, make sure it's 50-50 as much as you can. If the relationship is new, wait. Do not overcomplicate it with property. It's not about trust, it's about protecting your options and your peace of mind as well. And the last section we're going to look at is financial maturity and commitment. This is the last piece of the puzzle, because the psychology of buying your first home is about handling the long game. A lot of people don't realize until they're in the thick of it. In your first year of repayments, most of your money goes towards interest, not the actual loan balance itself, and it can be a little bit of a shock after 12 months seeing your loan balance go down by just a little bit. Financial maturity is less about how much you earn and more about how consistent you are with that income. It's about your habits, tracking your spending, saving regularly, and showing the banks genuine savings over time. Confident homeowners aren't the ones who make the most money. They're the ones who always know where their money is going. They understand their budget, they make the repayment first, and everything else in their life comes after. And they've also prepared for a little bit of uncertainty, interest rate changes, job shifts, and even maintenance costs on the property as well. Everyone should at least have 3 to 6 months of expenses saved in an emergency fund, which is non-negotiable. Understanding the commitment behind home ownership is just as important as the numbers. It's not just a transaction, it's a lifestyle shift. Buying your first home is one of the biggest financial decisions you're ever going to make, but it's also coupled with one of the most emotional decisions you will ever make as well. So before you buy, take the time to ask yourself, are you emotionally ready? Are you financially ready? And is this going to fit the life that you want to live?